Thanksgiving night, low liquidity, thin staffing, and silver is exploding above $54, its highest level in over a decade. Then, at that exact moment silver prepares for a breakout, the Comex futures market suddenly goes dark. 9 hours, no trades, no price updates, just one official explanation from CME Group. A cooling system failure. Really? Let's walk through what actually happened on Black Friday and why this outage may be the first visible crack in Comex. To understand the shutdown, we need to understand what was happening inside the silver market hours before the lights went out. December open interest had collapsed from above 100,000 contracts to just 13,000. At the same time, March exploded to over 100,000 contracts. A rollover so extreme, it now stands amongst the largest in recent Comex history. Physical markets were flashing red, China and India in backwardation, China reporting their lowest silver inventories in a decade, LBMA London hitting multi-year lows, registered and eligible inventories falling together. And then, December delivery day arrived, 28th November, first delivery day for December 2025. 7,330 delivery notices issued in a single night. That's 36.6 million ounces. December, the small month, demanded more silver on day one than Comex can freely deliver in an entire month. And that's exactly where the cracks began to show. In the hours leading into the shutdown, the vault reports began to move in ways we almost never see. Take a look at the vault report from the night Comex went dark. Asahi suddenly upgrades 556,000 ounces into registered emergency deliverable metal. BRICS shows a mysterious 1.2 million ounce negative adjustment, the kind you only see under stress. CNT moves 897,000 ounces in a perfect one-to-one swap, a clear scramble for registered bars. And the biggest tell, JP Morgan. They pull 13.4 million ounces out of registered in a single stroke. The result? Registered silver drops 12.5 million ounces in one day. Eligible drops too. The entire system shrinks. These are not normal flows. These are panic adjustments right before Comex went offline. If Comex actually had 138 million ounces available as per the registered inventory, none of this would have happened. The system behaved exactly like a market with only 10 to 20 million ounces of real float. These aren't routine adjustments, this is scrambling. You don't reclassify 13 million ounces of registered silver overnight unless you're managing a serious imbalance. So how did Comex handle all this? At 10 p.m. Eastern Time on Thanksgiving night, silver was breaking out to a new all-time high above $54. And then suddenly appeared the CME tweet. Due to a cooling issue at Cyrus 1 data centers, our markets are currently halted. But here's where it gets strange. A real data center cooling failure wouldn't freeze only silver. It would freeze everything. It would push systems onto redundant backup clusters. It would trigger automatic failover. Yet, CME's own tweets reveal something different. Their first tweet, all markets halted. Second tweet, Broker Tech EU is trading normally. Their third tweet, FX and repo markets are open. And the final tweet, metals reopen at 8:30 a.m. Eastern Time. So bonds were fine, FX was fine, repo was fine. Only gold and silver futures went dark. A cooling failure doesn't target one asset class. A system outage doesn't selectively shut down precious metals. Was it a power failure or just containment? So what really happened? Here's the simplest explanation. Comex needed time to process 7,330 day one deliverable demands, to handle emergency bar movements, to reconcile vault discrepancies, to confirm refinery inflows, to rebalance short positions, to control the price during a surge, and to reduce overnight volatility. The market was about to run away from them. They didn't just pull the plug, they held it there for 9 hours. Comex struggled and briefly went dark during the small December delivery month. What happens in March? March is overloaded with nearly 120,000 contracts that is 600 million ounces of exposure, 5 times official Comex registered metal, 30 times actual deliverable metal, combined with lowest global inventories in years, export bans from China, rising premiums in India, refiners running at maximum capacity, ETF outflows drying up. In December, Comex was stressed. In March, Comex may be cornered. And when an exchange is cornered, it has only one option left. Not metal, not bars, not trucks, just a wire transfer. November 28th wasn't a glitch. It was a stress test, a warning, a brief blackout to hide a system strained by physical demand. Black Friday was the first tremor. March is the earthquake. Until then, watch the vaults, watch the premiums, watch the rollovers. Because the story didn't end that night, it simply disappeared into the dark for a few hours. This is Market Velugu, Light on Markets.